Hey everyone, welcome. Welcome to the PivotBoss Premium Trading Room. I am Frank Ochoa, aka PivotBoss. Here on this day, March 11th, 2016. I'm just checking out how the markets are closing here. You should be able to hear my voice now, and if you can just say what's up and let me know that you can hear my voice. You should be able to see market delta as well. So this is the platform I have up right now, Market Delta. We're kind of finishing the day right into our final target on the day, which is 2011.75. Hey Tom, great to see you. Man, what a continuation. That was the final target on the board today. It was 2011.75. And it also got right into the 125% extended target there on the ADR target for the day. That's fantastic. All right, welcome everyone. What I wanted to do here was basically review the markets. I was going to review them anyways at the close before the weekend was over. I was going to check out some of the potential stock opportunities based on a few scans, and since I'm doing it, might as well have some folks hang out with me and ask whatever questions you want. Maybe we can even take requests on whatever stocks you want to check out. If you have any requests or ideas about any charts, I'm open game. But basically, I just wanted to hang out, check out a few charts, provide some thoughts. Hopefully, they're helpful for you as we head into the upcoming week, and it should be fun. So, first of all, let's go ahead and get started. For those of you who aren't familiar with me, welcome to the room here. Let me just share this for a moment. You can go to pivotboss.com and click on About Us, and you can learn more about me and some of my background. I basically started trading as a college student, and was trading my student loans. Got real brave and learned a whole lot. Started trading my student loans and caught the eye of a firm in town that specializes in trading platforms called Nirvana Systems, and together we were able to create some fantastic tools for traders over a period of a decade plus of my pro career. And then from there, just went off on my own and have been basically happily ever after with my family and just doing what I love to do, which is trading, helping others, and pursuing my passions. That's all I do. You can see down here a little bit about what I like to do. Love to do carpentry work. I love to do smoke barbecue. I'm gonna be smoking barbecue this afternoon. Actually, this weekend for my daughter's 7th birthday. So we're gonna have some pulled pork and some other things that I'm throwing on the pits. I love looking at the stars and home brewer and all that stuff. So I mean, I pursue so many passions, and that's why I kind of left. Also was, it's not always about working for someone else. It's about being happy with what you're doing, and that's what's so awesome about. That's what's so awesome about what we do as traders is it gives us a freedom to do what we want and pursue our dreams. So this is fun. So thanks a lot for hanging out. You can read more about that later if you like. Okay, let's go ahead and get started here. I was taking a look at the ES here. Basically, the ES had a pretty wild day. The previous session by rallying up into 2001, which is our 25% weekly PivotBoss pivot. We hit that level right on the button and dropped until we hit the previous month's high, 1959.5, and that was a level we anticipated we could have some buying, some responsive buying come off that zone, and with the previous March contract it was 68s. Once we moved up to this one, we called out 59.5 as the zone where we could see some buying, and that basically bookended both zones here, and that created what I call a key range. And with this key range here, basically all I'm looking for is an impulse range high, and then I see it snap back in the opposite direction until it finds the lowest low, and then when it pops back into the midpoint of the range, that's now what I call a key range, and you have key levels to play from there. And the reason why these levels mean so much is because these are the levels, the same levels the algorithms, the programs all trade off of, kind of a self-fulfilling type of thing. You can see how price smacked right into this level, held it, pushed through it, went a nice distance, came back, held it, just continued higher until it got into the 25% target. So this was our target for the day up here. That was the the farthest target that I could see going into, and that was the target that we thought we could see some selling pressure come in off of. And it all kind of came off that key range. So that's just a little bit of insight into how we were looking at it based off of this recent move here. Great question here. How does market delta compare with TOS? Do you lose much with TOS charts? I use market delta and I use thinkorswim, and I use them concurrently. And I have several platforms actually running in the background on several machines here. But usually what I use in the room is market delta and thinkorswim, because it's kind of universal tools that a lot of traders really like. Market delta also offers a great footprint chart here on the right, which is very useful for what we do, especially in helping and confirm entries right at our key levels. So market delta is fantastic with that regard. They have the free market delta trader. They also have the market delta charts and pro version as well, and this is what that is. I love it. I also have thinkorswim as well. So if I pop this up over here, you'll see that I'll be popping into thinkorswim. And as a matter of fact, we bring up ES here. This is the ES and some of the analysis that we've had on it for some time. And this is kind of the analysis that I used basically to help forecast the potential sell-off back to 1800 last fall. This is the same analysis, nothing more than the stuff on this chart right here. And that basically goes back for this ES. Here's the high and here's the low, and that was that impulse range that I just talked about. So with the impulse range that I talked about with the intraday chart, this is the same thing. It came up here till it couldn't go anymore, and then it sold off significantly till it couldn't go down anymore, and then it bounced back to the midpoint of that range. And now you have some key levels here to play off of, including inside key levels and expansion levels outside. And once price was unable to hold the top up there, that's when I mentioned I think we're headed back to the midpoint of the range with a shot at rotating across the range, because this would imply failed range expansion. Failed range expansion is one of the most powerful concepts in all technical analysis. And that's all that was. Failed range expansion, you see price drop back down, and then you see price pull back to that level, and then see selling pressure again. And that, in addition to identifying volume over here, we had an HVN. We had the HVN right here. MCV was around 2072 at the time, and going offered here, that's how we were able to really home in that we were headed back this way. So it's basically how I use what I call the PivotBoss method, or the PivotBoss approach, where I'm using price, I'm using volume and value, and that's all I'm doing in all the charts. And from there, we're able to have some very clean levels, and you can do that with any platform. What I did right there has nothing more than just finding that high, finding the low, finding the midpoint. And this is actually a Fibonacci extensions tool. And what I did with this tool, if I double click it here and share it with you, all I did is modify the tool here. Modify the tool. So down here, instead of using the normal fib levels, I tell it to mark the 0 level, which is the midpoint. You mark the inside 25%, 50%, 75% increments. This is 100% expansion, 150% expansion, and you do it in both directions. So you can do minus and you do plus, and then you can color code it, and that's how I did it. So basically, this is just using the tools there and using them in a different way, and that's what I do with any of the platforms. So that's why, really, what I say is you don't have to have the exact platforms that I use, because you can do these same approaches with most platforms. Most platforms have volume profiling. Most platforms have tools and an ability to write some type of easy language code into it. But they all have their things that they do really great. And Market Delta does some really, really good things, especially with regards to footprint, volume profiling, etc. It's just fantastic. But I also like thinkorswim and the ability to share things very easily with them as well, and some of the ability to easily code some powerful tools and indicators in here. So these are some of the PivotBoss indicators that I use that are custom coded, and it's powerful. It's super powerful stuff, and that's all we do in the trading room is we know how to use these tools. For example, in looking at the ES right now, you can see right here these pink or fuchsia bars right there. Those bars denote that the average 5-day range the current 5-day range is much smaller than the average 5-day range, and that tells you that prices are tightly coiled. You know, you have a really narrow 5-day range compared to average, and this is an average over a 10-week time frame. And basically, when you're less than 65% compressed, or less than 65% of that average, that usually implies you're going to see some significant expansion ahead. So that's what we were looking at this week, was the fact that we, you know, based on the wide pivot range that we had formed based off the previous week's rally, we were looking for some sort of range to develop this week. And then, and from there, now we can see that we have a compressed 5-day range, and compared to average being this gray line right here. So basically, we've been averaging 64 points on a 5-day range basis, and currently speaking, we're at about 45 points. You know, that's X amount percent less, and what that tells you right there is you could be looking at significant expansion ahead. So obviously, that's what we're looking for. Right now, we're testing the upper portion of this range, and you know, expansion from this range, from that key range that we drew on the intraday time frame, it's going to be very important. So additionally, one of the things that's powerful about this platform is the ability to create some fantastic pivots and you know, time-based type indicators based off of price. So basically, I can come in here and bring up the pivots. There we go. And this is what I call PivotBoss Pivots. And these PivotBoss Pivots are pretty cool. They're super powerful, and it's because they're just based off of price and price range, and it basically helps to identify those hidden areas of support and resistance that the programs and the algos are using. You know, this is nothing more than what they're doing and what they've been doing for a long time. This is how traders have looked at the markets for a long time. Basically, what these pivots are doing is you have you have this white line here. You have this white dotted line, and then you have this white line down here. And that's basically the previous high-low close of the previous month for monthly pivots, or the previous high-low close of the previous week, or the previous high-low close of the previous day, or you can make it a 2-day range or a 2-week range, whatever the case is. And from there, you create the pivot range, right? The pivot range is the high plus the low plus the close divided by 3. That's the pivot point. And then the opposite side of the range is basically the midpoint of that range. So basically you have the high, previous month's high, the previous month's low. The midpoint is right here. That's the bottom of the pivot range. You take that distance and you create the opposite end. So that's the inside key levels that you would have for the PivotBoss pivots. And then you have these expansion levels above. So let me do this here so we can see this a little easier. Well, let's do something else. All right, here we go. So basically you have these white lines right here, high, this is the low, this is the close. Then you have the pivot range that was made famous by the book The Logical Trader by Mark Fisher. And then you have these golden lines up here. And then you also have them below the range as well. These are just expansion targets, 25, 50, 75, and 100% expansion of the previous range. Same thing to the downside, 25, 50, 75%, 100. So this is the PivotBoss pivots, the way I use them, and it's phenomenal how accurate they can be in helping you identify failed range expansion, continuations, times when the market is trending well, or when it's coiling up for expansion. I mean, it helps you do so many different things. For example, the way we were able to identify that we were likely rallying back toward highs in the S&P, in this case, this is to TF, was the ability to see that price was failing to hold below the previous low, below this pivot low. And in doing so, when you fail to hold below the previous low this way, you rally back toward the close with a shot at seeing a continuation toward the high. And you can see that basically that concept is what helped us identify several of the rallies we've seen across the board, from crude oil to NQ to ES, and even similar concepts in gold. So right now, let's take a look here at the ES. What we've seen recently is a big time squeeze to the upside. Let me bring up market delta for this, just to give some insight here. So here's the ES. One thing we've been talking about, at least in the trading room, is how price here has been stepping higher, stepping higher, stepping higher. Right. This is the weekly pivot range right here, the weekly pivot range, and that's just a quick gauge of direction and a trend. And one thing we saw was lower value here for several weeks, and then when price pushed beyond that, the sentiment shift, and the expectation was, hey, we want to be able to defend pullbacks to the pivot range for new highs, defend the pivot range for pullbacks to new highs, defend it for a shot at new highs. That's been our primary MO the entire time. Additionally, in the ES, what we were looking for eventually was a retest of the previous month's high after last week's rally. That's what we were looking for. So basically, we had this big rally last week, and then I said, hey, when we pull back now, because we went well beyond that previous high, when we pull back to it, that's a spot to defend, and then look for a potential squeeze higher. And that's what happened yesterday. It finally got there, because it hadn't gotten there that entire time, and finally yesterday, boom, it hits it, and that snags a nice push to new highs. And you can see here we're closing, we closed pretty well after hitting our 2011.75 target. So the expectation would be, let's see how much higher we go. And obviously with the current rally here, we could see this thing push right back into previous highs here around 2034.5 on this contract, back toward these previous highs. But the entire goal here initially, and I don't have the new key levels on here just yet for the recent range, but basically the expectation was, if you have this high right here and this low, and you have a retest back toward the midpoint, you create that key range. The expectation is if you cannot hold below this low, then you snap back to the midpoint of that range. And then upon pushing through that zone, the expectation would be a continuation to the top of that range. So this is what we talked about before. There's a solid shot at continuing back into value, back toward 2061 here. That's previous value. And that was the area that we tested before we sold off. We came down, we failed to get new lows after this lower high, and now we're just going to complete the move, it seems like, right? So that's what we're looking at. How does this thing continue in the upcoming week? Obviously, we have a very clear round number here, 2,000, and we pushed through that level today and held it pretty strong. So I would say that coming back into that zone next week offers that opportunity to defend. And perhaps push this thing higher and see how much more we can get to the upside. Obviously, we're going to have new targets for the upcoming week. So once we start to print the Sunday evening, we're going to get new PivotBoss ADR Method targets here for the week. I can bring up the ones for the month. And right now, for the month, what these targets are doing right here, basically these targets tell me how likely it is that price is going to go toward these targets, whether it's this level, price level, or this level. And this is what I call the PivotBoss ADR method. The ADR method is based on average daily range, and what this is looking at is average monthly range, and it's using a 10-month average here. So it's basically saying, what's the average 10-month range? And right, so what's the average range for the month over the last 10 months? What is it? And once you get that number, basically what you do is you find the low for the month. Here's the low of the month right there. It's 1912s, right? If that's the low of the month, then forecast 100% of that 10-month average up, and you get this number right there, 2063s. So basically, if you believe that this is the low of the month, which we're the farthest we've been away from that level all month, it's just gone straight up since March 1st, the first trading day of March, and it's just continued higher. So the expectation here is on an average move over the last 10 months, the expectation would be that you go at least to here. If we get right here, it would be an average move over the last 10 months. So it's an easy call that we get to that level, right? But that's an average move, and markets don't always move in perfect averages. So that's why this level right here is our primary target for the month. That's our primary target for the month. So expectation is that we at least continue into 2025. That's the highest priority target. And then from there, this would be a secondary target. But the expectation would be, if you're using auction market theory or volume profiling, basically if you're going to go from rejection, you go back to acceptance. And that's why we had RI set on that 1921 on the H contract, which is now 1912s on the June contract. We had our sights set on that level first, and then if we push through that level and we defended at it, the expectation was you go to the next highest HVM. That's 2061s. So we could be looking at a solid continuation higher, and it would just be normal, right? So this doesn't mean that we're going to run off though and push through all-time highs. We've been through this before, and each time what we've seen is every time we get into that level, things get very heavy, 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 and then boom, drop. Then come up and get heavy, 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 and boom, drop. There's nothing to say that we can't do that again. Boom, 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 and drop, right? Because if you look at it again from a basic volume profiling standpoint, if you're going to go from rejection, then that's because the market didn't want to trade there. It's rejecting to go back to an area where it can happily trade at acceptance. The market is around to facilitate trade between buyers and sellers. So this is an area where you see acceptance, 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 acceptance. We can chop in that zone because that's where the market wants to do business, right? And if this is a huge, range that's just basically seeing distribution, then we could see that continue to happen. That's what's happening, facilitating trade up here, and you're seeing distribution. So we talk about this in the trading room, and I also talk about in the premium analysis. Just got to be aware of this kind of rounding off pattern here, because this is very ominous sign, especially when you have this horizontal support there. These types of patterns tend to challenge that line and attempt to break it, and that could mean some significant longer term weakness should that pattern play out. But again, nothing's to say that we can't just come into the zone and trade, and then see another attempt downward. So just trying to visualize the future here in terms of how this thing could play out. Our expectation was based off of the weekly pivot ranges. We would see continued strength, and we would look to defend at the previous month's high, which finally got hit yesterday, and we've seen a continuation to the upside. Very, very nicely so far, and the expectation is at the very least 2025 is very doable, and we could see a continuation in the 2063s. So what I'm going to look for, just in case, because obviously I believe we have the Fed coming up next week. So what I'm going to be looking for is anytime you get beyond a significant key range level. So getting beyond 2,000 here, you can see these highs, or 2001, whatever that top is. Getting beyond that level, I'm always cautious. I'm always looking for the potential failed range expansion. So if we start Sunday and we start below 2,000 and we start to drop, this could be, a significant failed range expansion that leads to a retest here, and we see what happens, and we may need to come back. So I'll be watching to keep in mind, you got to see if this thing's going to fail, right? So you got to have a level to watch. But overall, I think that if we drop back into the zone, it's still a buying opportunity for a continuation higher. So that's the early idea right there for the ES. Let's take a look at something else here. Let's look at crude oil. All right, here's crude oil. This one's been very bullish and kind of wild lately. We've had this one nailed pretty nicely in terms of longer term swing moves. When we came down into this zone here, at least on the front month contract at the time, price had pushed below that key range. And again, what I talk about is if I draw a key range out like this, I'm looking for failed range expansion beyond that range, because if it fails to see acceptance beyond it, usually you see a big quick snapback right to the middle of the range, followed by the potential to see a move across the range. So that's why I mentioned before, on that day, I mentioned, hey, we could see a move back to the middle of the range here, 34.63, and we got it. But if we get acceptance beyond the 35.25s, then that would imply a move into the next highest level, which is 37.57, and then a continuation to 40.50. So that's kind of what's playing out so far, and we're almost there. So this one's been kind of wild because it's been shaken out, big move up, down, up, pull back again. But overall, the expectation would be for a continuation at least into 39.17. That's kind of the MCV from this range here. We were expecting a move there. We almost got it today. But I think 40.5 could be the next key level above. And again, if that level up there doesn't hold, then we could be looking at a return back down. And so there's nothing to say that we can't just, even though we've seen this much strength, that we can't just drop back to value. Because one thing we know here is that composite VPOC is here, and that's the 33.44 level. That's an important level right there. Basically, that level went bid here. After so much defense at that level, it finally went bid and pushed through that level. Typically speaking, you may want to come back and retest it, and so it wouldn't be out of the question to see another move downward. And you're starting to see, right in this zone above 40, you're going to start to see some LVNs come into play, and maybe perhaps some profit taking. So if it does start to go offered here off the 40 halves, we could at least see a move back toward 37s and perhaps lower. So just again, trying to visualize this, how this thing's playing out. So far, we've seen a continuation. The expectation would be for a move into 40.50, and we'll see how the lines stack up for the upcoming week. Let's look at the Thinkorswim platform for a moment. All right, here is Thinkorswim with crude oil. Right now, we saw a move into the 50% PB pivot, which is right here, and that's basically the high of the week so far. So that's been a nice move into that 50% pivot after taking the high bid and just taking this thing all the way up. So it's pretty nice up here. The way that this has it set up here, and let me take off some of this clutter. So what you'll see right now is how prices rallied, and it's basically this was the initial key range right here that had us on point, that had us locked in for a sell opportunity, and then a continuation into this levels. This is the key range that did it all. So for those of you that followed the analysis during that time, basically when we came out last year, basically what we were looking for here was when this thing found this low and rallied way up, it smacked that high, and I kept saying, okay, when we find this high, if it pops back to the center point here, look to defend it. And then that's what happened, right? That's the beginning of how a key range develops. And then once price pushed through this high, and on this day right here, when we got that rejection, I mentioned that in that commentary, hey, if we retest that midpoint of that range, that could be a sell opportunity back to the middle, followed by a move back across the range. And that's how we were able to forecast with precision. I mean, I think it only went against us 5 ticks, and then it went in our favor 12 handles. That was a big-time move to the edge. And now what you saw was once price pushed through it into the 25% level, I mentioned defending the previous low here would suggest a continuation into the 100%, followed by a move into the 50%, followed by a move into the 100%, and we got those moves. So price moved perfectly off that key range again. And then to follow the story a little bit more, right here is what I mentioned before. On the front contract, here's the low, and you can see right here we did it again. We did it again, and this was right on the money. So price drops into this low, it drops through it here, bounces off the 100% expansion target from that key range, and then starts to push back above the level. And that's when I mentioned we're likely going to push back toward this recent high here. And that's what happened there. So, this is how we've been able to follow it so nicely. Now what's happening is price is now back above the bottom of that key level and attempting to hold. So here's the bottom right there. See it if I bring it all the way across. This is the first time this week that we're retesting that level since we took it offered basically at the beginning of the year. So we've come back and we've actually taken out all the shorts that have been out this entire time. And now this is starting to push up. So that's pretty impressive. What I'm going to be watching for is, can price stay above this level now, 37.75? Can price stay above it? Because if it can't stay above it, that would imply a quick return back to 34s, 34, 34.50, somewhere in that zone. So basically, we had the, kind of this level right there. So failure to hold above 37.75s could spark a move right back to the zone where it initially went bid. And that's one thing I'll be watching for. If we do maintain acceptance above the zone, then I think we could be headed even higher still into the 43s, which could be the midpoint of this key range here. So there's a few things to consider here with the crude oil chart, but I think, again, it favors a little more upside to those upside targets that we talked about before. 34, why is 34 important? 34 is right here. This is the previous month's close. The previous month's close. And so price and taking that level, bid through that level and rallying up into the 50% PB pivot here. If price fails to hold above here, you're likely going to come back to wipe out, everybody that got long to begin the month at the end of the last month. So basically, boom, pow. That's where that is. Here's a volume profile here. 3486. It looks like yes, absolutely, and that's exactly right. So if price does come back to that zone, that would be a zone right there to defend and further squeeze, perhaps again into the middle of that last key range, 43.54s. So right now, this is kind of the early area just to see what happens. Some of these moves were much, much cleaner to begin the year. I mean, that's how we had some of these moves marked. But now this is territory where it's finally broken above previous highs, and it's starting to make a move. So coming back to those previous highs is an area to defend, and we'll see how it responds should that occur. But if it does defend successfully, you're looking for a price move back up. So this is getting pretty fun and interesting here for crude oil. Here, let's bring up some gold. Gold's been fun. Gold's been a lot of fun. For those of you that have been following the premium analysis there, it goes out 1 hour before the close, 1 hour or 2 hours before the open, and then usually within an hour, 90 minutes after the close. And I put it out there. And, what I talked about to begin the year was spot on with regards to this gold contract right here. And, some of the movement we've seen it now is starting to get really fun. But we've had this one perfectly nailed. Again, here's the pattern we were following. Early on, we were just looking for expansion from this little portion. And once we got it up through that level, we were talking about defending the first major pullback. And in doing so, that would open up a move back to 1139 and then a move back into 1169 we had. And basically, price did that perfectly. In doing so, it pushed through a previous week's high and came back and defended the high right here and smashed higher again. So that all came from a key range right back here. So this is kind of a theme that you're seeing here in terms of how we analyze price in the room. But basically, here's the high and here's the low. So price goes up till it can't go higher anymore, slams down until it finds that lowest low, and then snaps back to the midpoint. Now you have a key range. You can see here how price traded off the inside 25%, the upside 25%, dropped down into the bottom of it, tried to hold below it with higher lows, forming that saucer bottom. And when it pushed above it, look where it comes back to, right there on 72s. That's the bottom of this level. Hit it perfectly on that level and then launched to the midpoint of that range and then to the top of that range. And so again, that's how we had, gold locked in. And that was on the first trading day, second trading day of the year. We had it going up, and it's because of this range. So this range is very important. Now look at how it's played out to that range. So I'm giving you some up-to-date speed, and then I'm bringing you into what we're doing here. But you can see price rallied to the top of that range and then through it. And just now, this week is when we're testing, last Friday and this week is when we're testing prices above that 1272. So that's why I've been talking about 1272 in those pre-market reports and closing reports. And, I've been talking about it in the trading room, obviously. But 1272 has come off this level. That's the 50% expansion from that key range. And I mentioned earlier that the failure to hold above it on this third day, that's what I mentioned. I think we get a move back toward 1233s. And we got to about 1237s or something like that. And so Since then, we bounced back up, and now look at this, failing again above that level, and then dropping back down right now. So this 1272.40 is very important, as is 1263.90. That's the top of this impulse move. Because what I mentioned before is, hey, listen, if this pattern right here is very powerful. The reason it's powerful is because the longer it takes to build that pattern, the more energy it builds. So when it does break out, you're going to see a lot of energy released. But what's happening here is you're getting a lot of, you're getting balanced trade. There's fair facilitation of trade, nice acceptance in that zone. You create value in that area. So when you take that value bid, the expectation is that you're going to continue higher until you either retest previous value or to create new value. And then I kept saying, listen, if we rally, look for the blow off top, because when we get the blow off top, that's when the market is going to set the range. So you sell that blow off top until you bounce down and find that bottom, at which point now you reverse course back to the midpoint. Now you have a new key range, and you have a range by which the market generated that balanced range. That's what happens. That's how you create a distribution range. You get a big rallying markup phase until you find that highest high. You smack down until you find the lowest low, and then you hit the midpoint. That's a market-generated key range. Now the market can conduct business at new pricing. So that's what happened here. So when we formed this level, that was a 300+% of ADR day. I said that's the top. Look for a move back to 1200. Boom, we hit it. Okay, we found a move at 1200. Now look at this pattern right here. It's my favorite pattern of all time. It actually formed up here too. It's called the extreme reversal pattern. PivotBoss extreme reversal pattern right there. And it's that little signal. And it's basically this 2-bar pattern. It's the rubber band trade, where if you snap this thing too far in one direction and then you form a small digestion day, you have high odds of snapping back in the opposite direction. So basically, that was the pattern that had me saying sell this way. Then this pattern told us to buy back up. And hey, you know what? I actually have it up here. Let me see. Here's my book. For those of you who don't know, I'm the author of the book Secrets of a Pivot Boss. Fantastic book that I've had so many fantastic, great reviews from traders all over the world. A project that took me 18 months to complete, put all my heart and soul into it. And I wrote every single word of it and never let anybody see it until it was done. That's how it was, my project. It was something I really wanted to give to traders. And this is one of my favorite algorithms I've ever created. It's one of my most successful algorithms to date, and it was my first major score on how I did it, but it's right here written in the book. It's called the Extreme Reversal Setup. And this is what it looks like, and that's what we see in the charts. Almost perfectly what you see in the chart right now. There's gold pushing up and seeing that small reversal occur. You see the snapback, and then it found the edge down here and bounced back up. It's textbook. So if I say it's a textbook pattern, I wrote it right there. There's the text. It's kind of funny. And then it goes through and gives some more information about it, and you can see some examples, and I talk it up. But this is right from the book. So then, this is a setup that you can do in any time frame, from, down to the lowest periodicities on up to monthly bar charts if you wanted to, volume bar charts if you want to. And it's fantastic for trending opportunities, and it's fantastic in all regards. So this is a little bit of background there, and this is what happened here. So if I go back over here, there we go. Basically, you can kind of see that's exactly what happened here. Big blow-off day, a small reversal day here, digestion, snapback. Same thing happened again. And that's how it was. We were able to find that edge. So in creating that top there, what we see is now price is attempting to hold above the top of this pattern. And if it can't, the expectation would be for a retest of these lows. So if price cannot hold above this level, this is the second week in a row now, because this is last Friday. It tried and failed. Then there's Monday, Tuesday, Wednesday, Monday, Tuesday, Thursday, Friday, all times above that level, rejected every single day. If you cannot hold above the top of this zone here and above the top of this area, the expectation would be a reversal across the range. So we could be looking at a move back toward 1191 half to 1200. And that would coincide with value right here. That's composite value on Thinkorswim. So basically, that's 1205s in that area. So if we can't keep above this area and we're seeing rejection, you're supposed to take, as traders, we take rejection and hand it off to acceptance. So that's what's happening right now. I did caution we have been, bullish here. And so we were looking for a little bit of a snap to new highs, and we got it over the last day plus. But now we're rejected up here. And again, this thing's moving all over the place. When it gets this hairy, something else is coming. So this is an area to watch. I'd watch 1272s. Failure to hold above that again this week for the second straight week. It leads me to believe at the very least we could be looking at a move back toward 1191 to 1200 or 1205, this zone right here. So that could be your nice long launch pad zone where you may see the first buy opportunity off it back up. And failure to hold this area would auction this thing much, much lower. So there's a little bit of insight there for gold right now. Yep, it could be a reversal across the pivot range as well. Absolutely. So, here's the previous high. And so failing to hold above the previous high opens up a move to the close. That's what we had here, and it bounced, failed again. So then you could see, again, it would coincide with a move right across that range right there, which is the midpoint of the previous month's range. So, again, I love confluence. That's another thing that my book teaches is confluence, multi-pivot-based confluence, multiple time frame confluence. There's something to it because there's so many algorithms and programs that trade based off of all these levels. So when you have those type of levels basically lining up nicely, you have a lot of programs and traders and algorithms and all the likes that are all going to be lining up at those levels with the same orders for the most part. And then it's up to you to read the order flow to either trigger that move or stay out of it based off order flow. And that's when we usually drop into the footprint charts and start reading order flow based off of that market delta footprint. Let's take a look at that. There you go, 30-year. This one's been fantastic. One thing that was really impressive early on, especially at the beginning of the year when we were talking about this one, was we were watching this kind of coiled up pattern right here. We were watching that. We just watched how it did this. And the first time at the beginning of this year, someone asked me, okay, what do you think about bonds? And it was the first time I'd had that question this year. And I said, whoa, this thing is significantly coiling here. And, a breakout in either direction is going to spark a huge move. And I'd be watching, these edges, right? And we break to the top. So, okay, we just broke to the top and we're rallying. Now we have this key level right here, and that's 160.30. And I wrote that level because it's important to the previous period of time over here. So you can see over here, I have several key levels, but right here, that's the 160.30. And, price had made a pivot here, right there, went bid through it here, defended here, offered here, this, and this all rejected, and then back to it. So it was like, whoa, we're right back to that key level now, okay? And so the initial idea was expect some selling pressure away from that level, but because of the fact that we broke this tightly coiled range to the upside, the first pullback should be a buying opportunity, and that could get us into 165.10. That's 165.10. The reason I mentioned that level is because everything above that level was heavily rejected. So I said that could be the front end of the zone where we start to see some rejection, so just be careful once you get to that level. And so we did push through all those levels and we got into that area. The problem is price did not stop at that level. It kept going through it, but I knew that level was important because what we saw in the room was price after pushing through it on this day, right here, there it is, that level was being absorbed by buyers. On this push up, and then we were looking for a continuation, and then very similar to gold, I said, okay, at some point you're going to see this thing get a blow off top, and when it does, we'll know, and we'll be prepared for it. And then we see this day form right here, live in the trading room. We're watching this signal. That's my PivotBoss wick reversal signal. It's the same signals that many people use. You can call it hammers and inverted hammers and all those things. But the way I do it is very unique, and I put a lot of different criteria into it, and it's all explained in the book, obviously, as well. This is one of the 4 patterns I put in there based off price. But basically, there's the 3 major key levels there. Actually 4 major levels, I believe. Criteria, yeah, 4. So basically, it's looking at the how long is the tail in relation to the body. For me, I like it more than 3.25% more. Where is the close in relation to the overall range? I like it to be in the extreme end of the 35%. So basically, if this is going to be a sell signal, it needs to close in the bottom 35% of the bar. How big is the overall the range of the day on that day compared to average? I like it to be at least 10% greater than its average bar size over the last 50 bars. So that means that this range right here, see how wide it is? It has to be at least 10% wider than the average bar over the last 50 periods. So over the last couple of months, 2.5 months. And when that happens, you get this signal. A lot of magic happens. And from there, what you look for is some type of rejection in the tail toward the midpoint of that range to sell it for a return back down. And so when we were forming this day intraday, I said if we close below this midpoint, look to defend a pullback up to that midpoint and sell it back down into the previous month's high. And the previous month's high, if I bring up the multiple months here. So I'm giving you some backstory, and then we'll look at how it's progressing from there. And right here, you see the move. There's the rejection back to the 25% PB pivot. We bounced up. We started to form that absorption here, that little absorption shoulder. And then from there, we were saying, look for the continuation here into that white line. And we finally got it. It took a little while, but it finally got there. So in completing that move now, we bounced up and we've been offered off the previous month's close price. That white dotted line is the previous month's close. So basically that little green bar, that's the previous month's close right here. It went offered immediately and away from the pivot range. That was the first trading day of the month. And then when price bounces back into that zone, it was defended again and offered again. So today in the trading room, I said, this is the second time we're being defended at this level. The expectation obviously is for a move into this previous month's low. If you're going to offer off the close, then you're going to look to push it to the low and test it. Additionally, what we've seen is a clear little range that is built out so far this month. And what we were talking about was expansion from that range will spark the next key move, likely to the downside here because we've been rejecting off that level again. And that could lead to a move not only to the previous close, but back into the 25% PB pivot below. So this is 25%, I call it S1 is the 25% expansion of the previous month's range. That's that right there. So we could be looking at a move that far down here if prices can hold below this range low here. Any failed range expansion, so if we pop back above that low, I think we go right back up. So this is kind of finicky here the way it's been going down recently at least, but we have a little channel here that's playing out. So, we could see another, play type of thing like this. But overall, 160.30 has been an important level, and that's what we're testing right now. So that's what makes this a little tricky. So if I look at this here, bring this up, look at this right here. So that's that 160.30 we've been talking about, how important it's been. You finally push through it here and you rally, and then you see the rejection back to it, and now we're testing it right now. That's right where we are. And typically speaking, this would be an area where bulls want to defend and attempt to squeeze these shorts here to new highs. And if you fail to hold above this zone, this LVN here, you're likely quickly dropping into the next zone below, right? So, this is, it's not off. I mean, you see this happen often where you can get a big breakout move and a blow off top, and then you just run it right back down to the origination point. And right now, we're basically halfway back there after this rejection day, and we've never come back after that day. So, the current trend is down still down until proven otherwise. Let me see. I was looking at some stocks here. I wanted to bring up and see if we can look at some stocks, just because I said I'd look at a few, and really wasn't able to find a lot of things that I liked. Oh man. Looks like my lists were wiped. Well, maybe we can find some here. Let's look at some here. What I'm gonna do is bring up. Let's see if we have any of these. Since we talked about that extreme reversal pattern, I was going to bring up a scan here and just see a few of these and see if something looks good. Sorry here. Oh, these are cheap stocks here. No, that's not as good. I had some already handpicked, and then for some reason, I don't know why, my list got wiped right now. I had a buy and sell candidates. Here's a good little candidate. This is one we've been talking about in the room, but you know it's kind of already pushing off a little bit. But basically, we pushed through this zone here. So when we formed the reversal here, we were looking for a push up. We failed to hold above the high, so we thought we'd auction perhaps back. And then once we got right back to this level right here, the expectation was for a defense again and a potential squeeze back up. So this is kind of the pivot to watch, which is 1370 here. Holding that level could suggest a push through this high and into the next upside level. And so that's something I'll be watching for around 1650. But so far so good here. But I think there could be more upside here ahead. Oh, thank you for asking about OmniTrader. Oh, for those of you that are premium members also, I have the page up for OmniTrader Visual Trader, and the last thing I'm cleaning up some of the code there to put online live, but the page is active and on the resource library at the dashboard. It's just I haven't really showed it just yet because I need to add that last bit of code, so I will update that. Let me see, for those of you that aren't familiar here, so if you want a quick peek here at the dashboard, here's the dashboard. This is the premium dashboard. So if you're a premium member and you're in the trading room, then this is where you hang out. This code is expiring, but basically we use these codes, we change them out weekly, and you can get on here. We have all the news and events. We have on-demand training, different platforms including eSignal, Market Delta, Thinkorswim, OmniTrader, Visual Trader, latest analysis and charts and all that stuff. So you can come down here and get a lot of these different training tools here. But just to know, for those of you that are basically using OmniTrader, I have some more code coming, and I basically gave a test case out of PivotBoss Pivots for the first time. Mike has it, and he told me it was all good to go, loved it, and I'm going to be putting that out. So PivotBoss Pivots will be coming out for OT very soon. Hopefully I can get it up today and finish it up. So right now I do not have OmniTrader up. It's on a side machine right now, and it's not up and running. But I'll keep that in mind for next time. So next time I'll pop up OmniTrader. I can bring up anything you want. I have eSignal, OmniTrader, Visual Trader, Thinkorswim, Market Delta, and others. So there's a whole lot there. I'm going to get my NinjaTrader back up as well and get some of those scripts coded up as well, because that's been hotly asked for. So I definitely want to bring that to you all. Let's look. Man, I'm sorry that I couldn't get some of those buy signals out to you. I had some great signals and now they're gone. But maybe I'll find them and put them up for next week. This was one that turned out great over the last week. This is one we were looking at in the room. And oh yeah, I'll get the TRXC. Thank you for that. This was the one from the room that was fantastic. Basically, we talked about this accumulation phase here. And when it pushed through that level and came back to it and formed this outside reversal buy pattern, this signal right there at that level, that's what I call the outside reversal. And basically that pattern is when you have a low that is below the previous low and a close above the previous high, and also is also greater than the average bar looking backward. And usually this one, it depends on how I like it, 25% greater than average or 10%, whatever the case is. We got all those criteria were nice and locked in, and we fired a signal right off that level. So what I mentioned was retesting the midpoint right there. You see that little yellow dot? Retesting that midpoint was the buy, for a shot at seeing a move into 860, this recent high, and we finally reached it this week. So we got to move off of 7s because this signal fired off 680, but it was really at 7s was the entry for a move into 860. We got that nice continuation. It was all based off of that. So for those of you in the premium room, that was a big time move. But now what you're seeing is a little bit of rejection up here, and you're seeing a signal in the opposite direction now. So this thing could be at a point where it's forming an impulse range high, and we could be looking at a snapback now type of scenario. So this is something that we'll be watching out for, because beyond these recent highs here, has been a lot of rejection. So you can see here, going back this way, look at that. Went offered and defended several times. That's why we targeted that level on this day. Buying here gets you that level. And we got that level, and now you're seeing some rejection. So if you're going to reject at that level, this could be a short-term area to sell for a potential pullback, to 750 perhaps. We'll see, but we gotta watch, because this thing is tightly coiled. So I don't want to project my bias on it. You gotta watch 1, 2, 3 days plus a tail. That's a 4-day range, very tightly coiled. A breakout in either direction could be solid. So there's stops above here, right? And there are some buy stops above here. There's been a lot of sellers. So if this thing can push, I mean, it could squeeze right back up. So I don't want to project, but right now it is definitely showing weakness off this zone. And if this thing takes value offered here, the expectation would be a pushback towards 7.5 and 725s. All right, let's take a look at that one here. TRXC. All right, here we go. I already have some key levels on this one. Wow. So I guess I have been looking at this one recently, and the expectation was that you form a key range here from this low. There's your 154s, and you rally till you can't go anymore. There's your high at 479, and then you drop right back into this day right here, and that is 317. That's the midpoint, and then you form this little range, right? So there we are. So now we have a key range right now, and the expectation at the time was if we can defend the midpoint of this range, it came a little lower, but if we defend this middle portion of the range, the expectation would be for a push higher. And for the most part, it got almost all the way up there, 479, and it just got to about 465s or so, almost got up to that level, and now you see an outside reversal back down. I think this one, let's zoom out a little bit here. So this one, what we were talking about before, was the larger range that's formed as well. So let me kind of bring it in about right here. And then let's see. Okay, there we go. All right, so this range right here, basically what you're seeing here is a nice trading range type of thing that's formed here. You also see kind of the volume profile here, right? Value is 311s. You have very low volume nodes here above 475s. Everything's low here below 223s and even lower. And so we're doing nothing but trading back and forth within this range. So this is a larger balanced range that's developed here from here to here. And right now we saw that high up here, we saw it snap back, and we formed that key range. And then we were expecting a move perhaps back up, or if it couldn't hold here, then back down to here, right? So instead, this thing popped up from that level. So now it's forming what appears to be perhaps a lower high below that zone, below that level. And of course, there's been nothing but weakness at it anyways. So this thing could be looking at a pullback to 311s for a retest of value. Remember, if prices, the natural rhythm of price is to go from rejection back to acceptance, then back to rejection, and then back to acceptance, back to rejection, back to acceptance. And that's the market. That's the market. That is what the market is designed to do. And we're seeing some rejection again twice above 460s here, and that could lead to a little bit of a move back downward toward 311s. Let's see. The only thing that's going to keep this thing bullish is the recent pullback here. I think 420 might be the important level here. We got a little bit of a bounce here off the upper 25%. So if you really zoom into this, we talk about the extreme reversal setup. I showed it earlier from the book there. This is very similar, but it's not as nice. It doesn't have some of the geometry that the algorithm is looking for here, but it's the same sort of thing. And right now you're seeing a little rejection digestion day here. So if you get above 420, that could challenge these highs. And if it can push through the 479s and find acceptance, then the next highest level up there, is going to be these expansion targets. And there's not a whole lot of history to really learn from in terms of the profile. But that's why we do price the way we do. You break in the nice zone right here, you break that in, you push through it, then you're going to target 560 and perhaps even 642. First thing first, you got to go to 560 if it's going to get an expansion, because the 25% level is a high probability fade zone. So if this thing does push through 425 or so and rallies into that level, you could see some profit taking and a pullback quickly. So be prepared to take some off if you're a bull here. So a little bit of analysis there for TRXC. Thank you for that suggestion. All right, let's take a look here. I think we've done pretty well. About an hour. I didn't want to hold you guys too long and gals. I think you all want to get to your weekend here. For those of you that are premium members, obviously we have our 10-part executive training series here. That's part of premium. So for those of you that are new trial members, I saw many of you buying the book, and with the book you're going to get a free 2-week trial to premium. The first thing you're going to want to do is come in here and watch this 10-part executive training series over the weekend and get ready for next week. This teaches the PivotBoss methodology from theory to analysis to execution, various concepts, and they're designed to be quick snippets. So they're 30 to 45 to 50 minutes long a piece, and you're really going to get some dense content. We also have the premium replay video gallery. So for those of you that are rolling to the new ES contract, I put up the new premium replay video from yesterday, adding new analysis to the ES after contract rollover. If you click on this, it'll pop up your video, and in playing it, you'll see it's about 38 minutes. So it's a good bit of content there with putting on the key analysis and levels for the current month. Here's your premium chart gallery. So clicking on any of these tag clouds here will pop up a custom slideshow for that content. So if you want to learn more about the footprint, you can get this, pop it up, and it'll create a custom slideshow for you. Absolutely, you can absolutely do that. And the way I do it is if you order the book, when you go to the book dashboard, there's going to be a claim your 2-week trial there. So you can claim it right there. So when you come back down to this area after clicking the footprint, you're going to see right here we have a custom slideshow now. And I have some very detailed charts about how to study the footprint, what we're looking for, and how to confirm our entries at our key levels. You can flip through. You can see how I put the footprint onto charts, and then we talk about these levels here, so you can learn more there. There's a premium video gallery with lots of other videos here as well that you can take advantage of, and a feature presentation. So a lot of your content is here. We also have some live charts here that you can use right in your browser if you're not near your platform. Obviously analysis, etc. And then of course the OmniTrader Visual Trader form is already up. The pages are up. It's just I haven't attached all those files just yet, and that's my goal. So for those of you that want to check out the book offer, there's an offer for today. Actually, it ends today, March 11th. So basically, a lot of folks have taken advantage of it, and you can get in on it as well. It's only $69.96 for my book. 314 pages of awesome is what I've heard. People really love it. If you buy this book here, you're also going to get 2 free weeks of PivotBoss Premium. So you can check it out here. You can go to pivotboss.com and click on Secrets of a Pivot Boss. It'll pop you up here, and you can read some of the nice things that people have said about it. You can come down here and see what you also get. You're going to get a life guarantee, 30-day guarantee here. So if you're not happy with it, obviously in good faith, you don't have to pay me for it. So I'm offering a 30-day. Nobody's ever taken me up on it because by and far folks have really loved it from around the world. I'm very blessed and humbled by the feedback I've received from my book. So something definitely that I'm very happy about and I'm very proud about, and that's why I'm able to offer a fully guaranteed 100% money back guarantee if you're not happy with it. Again, I've never had to refund money for it, so that's how highly regarded I believe that it is by traders. So check it out. You're also going to get 2 free weeks of premium. And if you already have the book, let me know, because all you have to do is basically get access to the SPB dashboard. So basically, for those of you, like, here's the premium dashboard. Let's see. Let's go back to PivotBoss. So here's PivotBoss.com. This is where all the analysis is, and all this is all free analysis to you. Pre-market reports, closing reports. There's some premium replays, so you can see some snippets sometimes from the trading room. If you come over here to Secrets of a Pivot Boss, you'll also get a dashboard. Once you pay for the book, you'll get a login, and this is going to be a dashboard where you're also going to get on-demand training. There's a 2-hour course on PivotBoss Pivots. You're also going to get proprietary code for Market Delta and Thinkorswim with regards to PivotBoss Pivots. Also pivot range, advanced floor pivots, Camarilla pivots indicator. So you're going to get some of that, those great tools and code as well. So this is what you get with the book. So not only are you going to get the book for $69.96, you get access to the page. So if you already have the book, let me know, because you should have access. Once you get access, you can claim it right here. So claim your 2 free weeks of premium. You click it, and then you're good to go. So this is basically your dashboard for book owners. And if you don't have access, let me know, and we can get that for you really quickly. Anyways, thanks for hanging out with me, folks. If you love this day, if you like what we're doing here, let me know on Twitter, because this is something that I was thinking about. Hey, we can do this every Friday. Hang out for 30 or 45 minutes at the close, and let's scout some things. Let's talk to market, and I can record it. I'm recording it now, and I'll send it out to you or put it out there for those of you that can't make it every week. But if you like it, let me know. Let me know on Twitter. Let me know now, because if it's something that you guys like, then we can do it more often, because it's cool. It's cool to get out there and talk shop, take your questions, and do it. So it would be my pleasure to be able to hang out Friday afternoons and talk a little shop. So it would be awesome. So let me know. Tweet me, and I try to respond. And everybody have a fantastic weekend. I'm about to go buy me some meat so I can smoke some barbecue tomorrow for my baby's 7th birthday. I'm so happy. So happy. It's going to be fantastic. The weekends are spent for passion. So do something that makes you passionate this weekend, folks. Do something that makes you happy. If you're not spending your time making yourself happy, then you got to ask yourself, what are you doing? You know what I mean? Make yourself happy. So I'm excited. That's funny. Yeah, the runway model. I did do a runway show, several shows actually, and it was funny because it was down on 6th Street in Austin where they were doing an open casting call. And I said, why not? Let's go in here and have a drink, and I'll just get in there. So they said, hey, so they pulled me out and asked me to do a runway walk. So I did it, and they said, you're hired. And before I knew it, I was walking runway shows in the Irwin Center, which is the basketball arena for the University of Texas at Austin. And I'm doing runway shows in leather pants and see-through shirts, and then from there I got other gigs to do other runway modeling shows for other fashion things in Austin, and it was just hilarious. And this is while I was working at Nirvana, everybody. So I would get my analysis done early, and then I'd book it out there and do some runway. It was fun. It was just, hey, why not? And it's hilarious. It was good times. Anyways, funny story. All right, everyone, have a fantastic weekend. And again, let me know on Twitter and if you loved it. And I see some great comments here, so thank you so much for that. And we can do more of this later on. Take advantage of that book offer. It's going to be fun. You're going to love it. All right, take care, Tom and everybody, and I'll see you soon. We'll see you.